Welcome on board Dr. Sanjiv Goenka, the chairman at RPSG Group, to talk to us about the latest at FirstSource. Hi, Dr. Goenka. Good to be speaking with you. Well, the latest announcement coming in, wherein FirstSource has deepened its presence when it comes to Australia. Could you talk to me about the strategic intent behind this?
Well, we've already got a very major presence in US and UK, and this is the third big market that we are targeting, English speaking. It has a presence of large corporates, and so there is a business opportunity. The whole administration of the Victoria State and Melbourne City has been extremely supportive and enthusiastic, and we feel that the opportunities are large. It's a beginning, and we should look at growing from where we start. It's a modest beginning, but hopefully it'll be an aggressive growth as we move along.
Modest beginnings, but expecting an accelerated growth from here on. But talking about that growth then, how much do you think this geography can contribute in terms of, let's say, order inflows, or what kind of revenue contribution one should envisage from this geography, particularly, Dr. Goenka?
We begin, as I said, we begin small, but hopefully if we can deliver service, it'll not be just one client, it'll be several clients. And we do believe that it'll not be just one sector, but we can look at other sectors. We're very enthused about the EdTech sector in that part of the world, and that is something that we would like to get into. So that there are lots of opportunities, and that becomes a base for a new country, for a new entry.
Yeah, and the base has been made for a good foundation at FirstSource itself, right? I mean, the efforts that you have been making with the leadership strengthening, the advisory board, the One FirstSource framework, etc., that you set up. What do you think is the vision that you see for FirstSource over the next 12 to 18 months out?
Simply put, we expect to increase our profits by 2.5 times in the next 3 years, say by 28. That is the expectation. For that, we need to get to 15% growth, and we need to get to 14% margins. We have our building blocks in place, where we are looking at our operations. We are looking at mining existing customers, and just getting from where we are with, say, 50 of our top clients, and getting to about between 5 to 10% wallet share would mean $550 million additional revenue. We are adding new logos, and major wins are now getting to between 2 and 3 a quarter. We've invested in G&A, which is beginning to yield results. Our sales pipeline has grown dramatically from, say, about 400 odd to 740 odd, and we expect that to grow to about, our target is 1.2 billion at least. The onshore-offshore ratio we are working on, and we've improved that, further scope to improve that. Our attrition rates, further scope to improve that. Get into more value accretive and margin accretive businesses, and get into the whole area of change request billing. We've not been doing that. There are a lot of very simple Banya unlocks that we are doing to actually increase our margins and increase our revenues. And of course, you're going to use technology, you're going to use things like generative AI and everything that goes with it to add value to the customers, to give a better product to them.
Okay, so that's the latest coming in as far as the overall breakup is concerned, and the kind of growth that you are expecting for the overall business as well. But which segment geography do you believe will lead the growth from here on?
Almost all our segments to grow for us and grow well, and we are fairly buoyant about the rate of growth, and the more we grow, the less we will need to spend on that growth, because we have already invested in that growth. We have invested in the infrastructure, we've invested in the people, we've invested in the team that we need to get to those numbers. So now the growth in G&A will be less, but the growth in revenues will be much more. So as we go on, you will see bottom lines increasing.
Okay, so you're expecting the profitability to grow at a better pace, given the fact you've already made investments in the G&A, as you talked about. Point taken. But what about the inorganic opportunities? Is that also a mechanism that you're going to push growth going forward?
Inorganic growth is a way of life, and that's the way the modern corporate world grows. So it's very much part of our scheme, but we don't believe in having too much debt to grow. So we will grow, we will take some debt for the short term, but over a period of time, we will make sure that we don't have significant debt.
Okay, yes, and that's something you've always been very cognizant of, that you don't want to over leverage yourself, and we've been very conscious there. But lastly, before I let you go, Dr. Goenka, the last time we spoke, you talked about how the group market capitalization is around 85,000 odd crores. As we speak right now, it's close to 1 lakh crore. But what's the internal target or the next target that you've set for yourself for the group market capitalization?
What I had said is 25, say 30 months, 2.5 years, we were looking at 2 lakh crores. As of now, maybe that period gets shortened, but 2 lakh crores is the target. We will still formally, publicly state that within 2.5 years, but internally that target has got shortened.
So you have internally advanced the target, and clearly you've been over-delivering. So we expect that 2.5 lakh crore market cap to happen soon as well. Thanks so much, Dr. Goenka, for making time and speaking with ET Now today.
If you like this video, then like, share and subscribe to ET Now.